These days, around 62% of Americans invest in stocks. And if you look at the S&P 500, it's nearly doubled in the last 5 years. You'd think everyone is getting rich, right? Well, you'd be wrong. Wall Street has a little nickname for most Americans. They call them capital donors. Why? Because 75% of regular people actually lose money investing in stocks. Instead of building wealth, they end up making the rich even richer. Right now, the wealthiest 10% of Americans own nearly 90% of the entire stock market. Clearly, there's a massive difference between how regular people invest and how the wealthy invest. So today, we're breaking down how rich people really invest in stocks, from the basics all the way to the billionaire playbook. How regular people invest in stocks. To understand why the top 10% are so successful, you first need to see how investing looks at different levels of wealth. Around 75% of retail investors, everyday people buying and selling stocks by themselves, lose money in the long run. They think they can outsmart the market. They try to pick winning stocks, time their trades, or follow hype on Reddit. But stock picking isn't as easy as it looks. Most people buy high when everyone's excited, and sell low when panic sets in. That's why professionals call them capital donors. That said, not everyone loses. Some regular investors do build wealth. How? By sticking to the basics. Most start with blue-chip stocks: Apple, Microsoft, Coca-Cola. These are big, global companies with a history of surviving market shocks. The strategy here is simple: buy, hold, and let your money grow as the company grows and pays dividends. For example, if you had bought Apple just 5 years ago and simply held it, you would have doubled your money. But putting everything into one company still carries risk. That's why many people shift into index funds and ETFs. How millionaires invest in stocks. Millionaires often start with stock picking, just like beginners. But the difference is how they do it. They're not chasing hype or trying to get rich quick. They focus on companies with strong fundamentals, undervalued businesses, steady dividend payers, or firms positioned for long-term growth. Some follow value investing, like Warren Buffett. Others try to find the next Amazon before the world catches on. But here's the key: millionaires don't just try to make money. They work just as hard to avoid losing it. That's where derivatives and hedging come in. A famous example is Mark Cuban. When he sold his company to Yahoo in 1999, he ended up with $1 billion in Yahoo stock. So he used an option strategy called a collar. He bought put options, which guaranteed he could sell his stock at a set price if things crashed. Some go further by using margin and leverage, borrowing money to multiply their bets. Millionaires also invest through hedge funds. How billionaires invest in stocks. At a certain level, even hedge funds aren't enough. That's where family offices come in. A family office is like a private financial empire. It's a full-time team of analysts, tax experts, estate planners, and lawyers, all working for one wealthy family. Imagine having your own hedge fund, private equity firm, and tax optimization machine under one roof. Private equity. Billionaires invest in private companies before they go public. Bezos invested in Google in 1998. Peter Thiel turned $500,000 in Facebook into over $1 billion. Musk backed Stripe early. These deals are closed to the public, but family offices get access. Tax loss harvesting, selling underperforming stocks to offset gains from winners. This lowers taxable income and keeps more money working. Buy, borrow, die, a favorite of Elon Musk. Instead of selling shares and paying tax, he borrows against them. The loan isn't taxed as income. When he dies, the shares pass to heirs without capital gains tax. Stock donations. Instead of donating cash, billionaires donate appreciated stock. This avoids capital gains tax and gives them a deduction for the stock's full value. Buffett has donated over $50 billion this way. Gates and Zuckerberg have done similar. Family offices combine all of these moves to build dynasties of wealth. Conclusion: so there you have it. That's how rich people actually invest in stocks. From everyday basics like index funds to millionaire hedging strategies, all the way up to billionaire family offices. But here's the big takeaway: investing isn't how most people get rich. It's how they stay rich. Jobs and businesses build wealth. Smart investing protects and multiplies it. Thanks for watching, and we'll see you next time.